Thanks, Chris, to Scott Phillips from Motley. Full now. Scott, good evening to you for some analysis. And the biggest mover today was Oz Minerals on the back of a huge jump in production.
Yeah, Tomo, g'day. It's been a fantastic week for mining companies. We talked about Lynas yesterday. Today was Oz Minerals' turn. A really big jump in copper production, really helping the company there. And it's a really important one because we know the prices, generally speaking, during the trading day, week, month and year, we're kind of across that. The production volumes and the cost controls are important. Not only was production up, but the cash cost was down. That's a really good recipe, and the shares rose today as a result.
Scott, Bluescope Steel was the second best performer, impressing the market with its full year results.
Yeah, remarkable. Again, speaking of miners having a good time, or at least resources companies having a good time, Bluescope managed to beat expectations, particularly for the second half, by a long way. The initial expectations were somewhere between $1 billion and $1.1 billion in second half profit. The company delivering massive gains on top of that, $1.2 billion expected for the second half, as you say, delivering a great full year result for shareholders.
Now, there was more proof of the boom in online shopping from homewares retailer Temple and Webster.
I dare say the end of the COVID boom may have been slightly too early predicted, Tomo. In this case, we saw an 85% gain in revenue for Temple and Webster, close enough to a doubling of sales. Operating profit up 141%. A reminder that we're still shopping online, and while some of us will go back to the stores, particularly as lockdowns get lifted around the country, as you mentioned, it is going to be a reminder that people will still shop online because we've learnt to. We seem to like it, and Temple and Webster is evidence of that today.
Scott, a crucial day for the economy tomorrow. Inflation figures are released. What can we expect, and what would that signal for the economy?
Yeah, this is going to be a tough set of numbers, Tomo. So, I mean, inflation's a tough one. I was going to say the good news is inflation is likely to be about 4% on an annual basis. Now, that's good news for the health of the economy, not so much for those of us paying grocery bills, electricity bills and fuel prices. So, to some degree, inflation's a double-edged sword. Of course, looking forward is different to looking back. Normally, we can look back and say, look, 4% for the quarter and then extrapolate from there. Since those numbers were locked in and before they're reported, of course, we've had 3 states in lockdown, real uncertainty as to economic growth. Chances of a recession are higher than they have been in quite a while. And so to some degree, the inflation numbers are interesting as a historical artefact, but really looking forward is the key one to see how the economy is going as a result.
OK. Now, finally, how's Wall Street looking?
I can't give you good news there, unfortunately, either, Tom. I prefer the good news days. This one is not one of those. At the moment, US futures down about 0.25%. Plenty can change. We are in the middle of US earnings season. A couple of good earnings will change that number. A couple of bad earnings might make it worse, of course, but it's going to be a case of waiting and see for us tomorrow.
Keep our fingers crossed. Scott Phillips, thank you.